Assalamu alaikum, and I'm really pleased to be here today. Part of my role in today's presentation, even though Jim says he's part of my team, I don't know whether he's part of my team or I'm part of his team, so he's largely told me what I should say and what I shouldn't say in today's presentation. Let's talk a little bit about home financing and the importance of home financing in the U.S. economy. Home ownership is the fabric of the American family. It helps build very vibrant community. It helps build personal wealth for all Americans. Housing is a major sector in the U.S. economy. And even though we've gone through a 12-month recession since March of last year, housing has been one of the strongest part of the U.S. economy in the last 12 months. This has been largely driven by a historic level of low interest rates that are available to finance homes in the U.S. market. Let's look at the value of homes in the U.S. We estimate that the value of homes in the U.S. to be around $12 trillion, of which about $5.5 trillion has been financed. But what's most interesting here is in the last 4 years, as you can see, American families have gained over $2 trillion of home equity. That is appreciation in the value of their homes, and that is really contributing to their growth in their personal wealth. This trend is expected to continue. We expect, as Jim indicated, that by the year 2012, the home financing industry will be close to $11.5 to $12 trillion. And a lot of this growth is going to come from two areas. One, house price appreciation, which has been relatively strong in the last 4 or 5 years, as this chart indicates, as well as new homeowners coming into the market, so the need for new housing stock. All of the reports that you see about home building and resale support the current sort of growth and potential for the home market, housing market. The next slide kind of gives you a little bit of indication of where have home financing costs evolved to, and for purposes of illustration, we put 1963 here, where the rates for home financing were a tad below 6%, and here we are at the end of 2001, and we're tracking home financing rates in a tad higher than 7%. So over this entire 30-year plus period, the cost of home financing is coming down. There is a reason for this, and part of the reason here is there is a different way that the American economy is financing homes today that I will get into in a little bit. Home originations, Jim mentioned, last year was a historic year, $2.1 trillion in new home financing. We expect this trend to continue. This year we're looking at a $1.4 trillion home finance market, and for the rest of this decade we're projecting between $1.2 to $1.4 trillion of new homes originated every year. What I'm leading to here is that the home finance industry is expected to be very strong and vibrant as far as the U.S. economy is concerned, not just now, but in our projection is for the next 10 years. Home equity, again, is going to be a significant component of how families accumulate wealth. And a large percentage of the growth that we see at Freddie Mac is going to come from minority families and immigrant families who are largely underserved in today's home ownership process. And we'll get a little bit into that in the next couple of slides. Today, the home ownership rate overall is about 68%. So 68% of American families own their own homes. When it comes to minority groups, that percentage is a little below 50, or around 49%. Over the next 20 years, minority families will be 36% of the U.S. population, up from 25. In addition, we're expecting 10 million new immigrants to come to the U.S. So this gives you a little bit of perspective on what the average home ownership rates are across various demographic groups. The highest is with the white Caucasian group. Home ownership rates are in the tad over 73%, followed by other minorities, and we've broken down African Americans and Hispanics. Now let's talk a little bit about the U.S. home financing market. Home ownership opportunity for devout Muslim families have been limited. Much of the reason for this is because there are the financing has come from essentially 3 or 4 sources. 1, from personal savings. 2, from financing available through individual investor groups. 3, some cooperative arrangements, and some limited portfolios that banks have made available to finance home that meet the financing needs of the Islamic community. The third aspect that we are tracking about the Islamic community is that it is a high population of both minority and immigrant families. And that's one of the reasons why we're looking at this segment of the market with a lot of interest, and we're trying to figure out what is the best way to promote home ownership rate within this market. So what are some of the limitations that we see that are present in the Islamic home finance market? The first one that we see is a lack of steady flow of capital coming into this. To finance a home, you need a fair amount of money. The average financing that we do at Freddie Mac today runs about $160,000. That number is significantly higher in the California market. Somewhere in the neighborhood of $190,000 to $210,000 is what a amount of financing is needed. This is quite a large amount of cash that is required for this transaction. Although the home financing system, as Jim outlined earlier, is one of the most sophisticated in the world, there is not a good understanding of contracts that comply with Islamic religious beliefs and standards and are also compatible with U.S. laws and regulations. So part of our role at Freddie Mac is to start reviewing these things and get some solutions from an institutional perspective into the marketplace. And last but not least, secondary markets. Freddie Mac is a part of the secondary market. Provides over 50% of the financing for the U.S. home market. And by and large, until we had our announcement a year ago, by and large, the secondary markets were not engaged in providing some of the financing that's needed to provide homes to Islamic borrowers in the U.S. So we've realized some of these gaps, and we are in the process of trying to figure out what are the best ways to help remove some of these barriers from the Islamic finance market. What we are hoping to provide is very streamlined and cost-efficient way that the Islamic financial institutions can access our funds, low-cost funds, to finance homes. And we also want to make sure our customers, as Jim pointed out, we are not lenders, we are investors. So our customers are American Home Finance, Wells Fargo, and the like, and our goal is to be able to provide them the necessary instruments that they need to be able to provide financing to the Muslim buyers. So the 3 areas that we're focusing on. 1, product development. There's a lot of discussion about this this morning, so I won't get into a lot of detail with that. But Freddie Mac is actively engaged with a lot of financial institutions, our funds, low-cost funds, to finance homes. And we also want to make sure our customers, as Jim pointed out, we are not lenders, we are investors. So our customers are American Home Finance, Wells Fargo, and the like, and our goal is to be able to provide them the necessary instruments that they need to be able to provide financing to the Muslim buyers. So the 3 areas that we're focusing on. 1, product development. There's a lot of discussion about this this morning, so I won't get into a lot of detail with that. But Freddie Mac is actively engaged with a lot of financial institutions to develop the right products that meet the needs from a Sharia perspective, religious perspective for the Islamic consumer, as well as meet the secondary market or U.S. regulations for us to purchase those. Once these products are developed, we are providing liquidity to this product by purchasing all of these loans from our customers like American Home Finance, and so that they have the ability to lend this money back. A third area that we have started focusing on is, and we have been for a while, is somebody in a previous presentation talked about sort of affinity marketing or niche marketing. We believe that there are new lenders that are needed to serve this community, and that Freddie Mac is very actively seeking companies that have the right infrastructure to approve them as seller servicers, so that we can have new customers at Freddie Mac that will provide this financing to the community. I told you earlier that I was going to talk a little bit about the home financing, sort of why banks are pulling out of this business. This slide would suggest that 50% of the mortgages today are financed by the mortgage-backed securities market, which Freddie Mac is involved in. If you look at the financing contract in the U.S., they're now 30-year type contracts. And the 30-year contract, and I showed you a slide that the 30-year return has consistently gone down over a long period of time. So banks or thrifts have difficulty matching their assets and liabilities when it comes to home finance. So what's happening here is most of these banks and thrifts are turning to the secondary market to help sort of provide the mortgage product that's needed for the consumers and get the liquidity out of the secondary market. And we see that this trend is going to continue, because unless the mortgage contract changes from a 30-year to a shorter duration, we see a continued trend from American banks and thrifts to sell more of their assets into the secondary MBS market. Since Jim and I were here last year, we had announced the first $1 million purchase from American Home Finance LARIBA. I am so delighted to report that at the end of 2001, in just a little over 10 months, that number was $20 million of new capital coming to Muslim families through American Home Finance. And we're very proud of it, and I hope you are as well. And there's a lot more, as Dr. Yahya and Mike Abuladi keep telling us, that there's a lot more loans or financing where this came from. So we're very excited about that too, Dr. Y.
You know what I'm looking for, right?
Yes. The two challenges that we see in this market, and these are areas that we are trying to help solve, and we need help from the community at large. One is standardizing the products. The best way to leverage the secondary market is to create transparency and come up with products that can be offered by multiple lenders, so that the whole community is going to benefit from it. So we need some help in standardizing the products. We also think that there are new financial companies that are needed in this arena. Companies that are specifically targeted towards serving the Islamic home buyer, as well as that can bring both scalable solutions, because mortgage, the industry is a fairly sophisticated industry. It's a large industry and a very competitive industry. So bringing scalable solutions and infrastructure is going to be a key for those that will be successful here, particularly the new firms that are coming into this business. And we're committed to working on both these dimensions with the community. So in conclusion, the cost of home financing is one of the lowest today in the history of the U.S. And we believe that this financing needs to be made available to more and more consumers, particularly the underserved Islamic families. Secondly, home equity, or the growth in house price that results in individual wealth, is an extremely strong component of wealth accumulation in the U.S., and it is imperative that the Islamic community at large, Islamic families at large, take advantage of this. We were talking about some of the stock or equity options, here is the real estate alternative that can be equally attractive. The third area is the secondary markets are key to liquidity here. This is a long-term asset. The best way to finance the asset is not on your balance sheet. And if you can take a page from the American banks, that's exactly what's going on here. The idea here is to attract and leverage the secondary market because the financing could be unlimited coming from the secondary market. And last but not least, product standardization and investment in infrastructure are going to make the difference between the winners and winners, because everybody will be a winner here because you'll be providing a new service. But the opportunity as we see it is tremendous, and these are the two areas that we need to see some new investment in for this market to be able to realize the full potential of low-cost capital in the Islamic finance market. Thank you very much.